The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And I'm following 3 great hours. You had Tom O'Brien just giving me a lead in here. Thank you very much, Tom. And great show. And we're looking at programming right through the day. Let's just talk about what's going on at this particular point. The Dow is up 176. We have had, if you're looking at my charts here, the left one is the daily, the right one, the middle one is the weekly, and the right one, in this particular instance, whenever I show the futures, that's the 120-minute chart, just about to hit the 200-period exponential moving average resistance level. So this is going to be very interesting. Look at that trend line in the weekly, how both last week and so far this week, holding that line beautifully. So far this week, of course, an hour and a half into the session. But look at the daily. The daily, that what I call the inside track of that up channel, pierced just a tad and then closed back inside every day, except that one little moment on the 9th that it went under. And now look what's happening. Was that the 9th? I said the 9th, but I should check. 11th of March. And we're making a leg A here. I call it a gray A. Why? Because it's still substantially underneath the previous high in the E-minis of 21.75. Let me just go to the ESM, which is the June contract, and you'll see, yeah. Oh, now this is really interesting. I remember seeing this and I thought, 2030.50 was the low on the 11th, 2030.75. So this is still leg A, but that's very interesting. Just that fraction, that quarter point made a difference. We could, in fact, have had a B here. Well, we don't. We have A's all around. And I wonder if this is the period where we're going to see the leg D in the S&P cash and the E-minis. Let me show you what I'm talking about here. And as I do that, I'll just run numbers. The S&P right now is up 20 at 2073.40. Now, what's nice about this is that in the in the cash index, this is what I was looking at over the weekend. This becomes now a leg B because it was a leg A, and it's gray leg B. I'll make it gray. Why do I always say gray leg B? Because when you have a buy signal, it hasn't yet gone to buy mode, underneath the previous major high of a peak peak D, E, or F, there's a chance that you could be making an H pattern. And to be prepared for that, there's that H pattern right there. To be prepared for that, it's better to identify where you are than to get too enthusiastic and say, oh, my goodness, new buy signal, we're going to go all the way to 2120 to a new all-time high. Let's just go one step at a time. Why? Because for last week, the S&P closed underneath the 9-period exponential moving average. So far now it's above. The 120-minute chart has just made a trough D, and this is going to become A, B, C. This is leg C, and now we can say that there's a good chance, because it's above the 9-period moving average and the 200-period moving average, that I could put an up arrow instead of the plus sign. Why? Because this is a very strong leg C, and the stochastic's acting okay, but the MACD seems to have enough power with a 0% line at a plus 2.80. Now, let's just go on. Looking at the different parameters, I would say that a close in the 2090s this week would suggest, yes, there now is at least a chance that the S&P makes its leg D in this time frame rather than having a more substantial move to the downside and later on going to a new recovery, a new all-time high. So the support that has to hold is the low of the day, which is at 2073. A close below that any time this week would suggest that you've got an arch failure pattern, a lowercase h. You've got the weekly chart that says the MACD is okay. It's not great, but it's really negative right now. And the stochastic is still under 80%. It hasn't turned up. So a lot's going to happen if the high of last week of 2083.49 is taken out this week. That'll be impressive action. All right, so we're going one step at a time. Most importantly, in the Dow INDU, this is in fact leg A right here. It's not leg B. And the weekly chart is still holding quite well. It didn't even come close to holding the uptrend support level right there. No, I shouldn't say that it didn't come close. I meant that it never came close to touching that level. That's really it. And that level now for this week is going to be at 17,570. And we're right now at almost 200 points higher, 150 points higher, at 17,939. And in the 120-minute chart, this is leg A, B. This is leg B. And now, so the parameters are a close below 17,700 this week, it would be very negative. A close above 18,050, at least would say that is very impressive action. We've still got Fed talk to come out. Now, it's very interesting that the TLT is at 128.12, up $1.40. Let's get to that in a moment. Let me just run these other indices right here. IWM was leading last week. Hasn't made an all-time high yet of 123.79. 123.78 was the high that we were looking at the G/C. And most importantly, what we're looking at is that the weekly chart says, good chance with the MACD strong, the stochastic strong, that we will go to a new recovery high. But it's trading at 123.43, up 80 cents right now. That's very interesting. It's up 0.65%. It was leading the last few days. And now the Dow is up 1% and the S&P is up 1%. IWM is lagging. Now, I'm not impressed at all with what's going on with the QQQ series. The power shares, QQQ Trust series, trading at 106.34 up 1. Made a peak D at 109.42. This is leg C, probably a trough C coming up. The 200 period moving average is way down 99. We don't even have to think of that right now. But what's very interesting is that the 9-period exponential moving average of 106.51, a little bit higher than where we are right now. The high today so far is 106.43. That has not been taken out. And I'm suspicious. I'm thinking here that, let me just do this. Here we go. All right, there. This is the falling axe pattern that we see so often after the arch right side is forming. We're looking at this, and I'm saying to myself, hey, I don't like this action at all. In fact, we have in my Traders Corner, the QID, which is 200% short the Qs, already lined up to possibly hit that button. I haven't done anything yet, and I'm going to wait. But I must tell you, I'm not that impressed with the QQQ series at all. I looked at it last week. I looked at it again over the weekend. It is lagging. And I think one of the reasons why it's lagging is that Apple, which is a pretty big percentage component of the NDX 100, is at 124.14. It's only up 55 cents, 0.45%. And that's really not good. It hasn't even taken out Friday's high. And the 9-period moving average resistance is at 125.15, a point higher. It's sitting on the weekly 9-period exponential moving average for the second week. I think Apple is looking very poor, and it's going to be quite a strong influence on the Qs. So here we're going to look at I don't know. IYC, I want to look at. The IYC is acting quite well. There's a pattern that I talk about very often. It's this expanding, declining cone. I call it the falling axe formation. It's taken that out today. quite decisively, and that's very important. I think it will make a leg D up this week in the weekly chart, and that suggests that the S&P just has a good chance that it might even do it. Who knows? But this is only leg C in the 120-minute chart, and it'll be leg D the moment it breaks 145.98. Let me just type that in here, 145.98. And so far, it's acting very well. IYC is the iShares U.S. Consumer Services ETF, and for me, that's really quite an important sector. Now, what's really important about this is that I put it together a little bit with the XMI, which no one actually talks about. They do have that. More defensive type stocks as well. It's a kind of a Dow mix with cyclicals and defensive stocks. And it's like the Qs. It's acting great today, up 16 at 1,873, up 0.86%. But the weekly and the monthly chart, the weekly and the daily chart are just suggesting it's kind of stuck. Just kind of stuck. And I want to put together the IYT. That's the iShares Dow Jones Transportation Average Index Fund. That has made a peak C in the daily chart. I can't fabricate a falling axe pattern here. It's more like, I suppose in a way it is, but it's more like a channel to the downside. It has the same principle, but it's already done a one-to-one to the upside. So I'm going to be watching this closely because the IYT had actually been lagging very badly. So today's action is important. The all-time high is back in the week of the 28th of November at 167.80. Now, it's fascinating that within the context of all these different charts, look at this. Gold, the GLD right now is down 27 at 110. 110.60, I believe. Look, gold has not been able to get out of its own way. And the dollar, and this is the first time I said to subscribers, as the dollar takes a bit of a breather, we will see whether gold is going to respond positively. So far, it hasn't done much, but I am expecting that it's trying to form some kind of a base here, and I don't know yet. This is the dollar chart that I'm showing right here. A peak F in the 120-minute chart, a leg F/B in the daily. So far, the daily, the flat stochastic suggests that I must think B rather than F. The MACD is still very strong, and the weekly chart is E/B. So what happens if the dollar by tomorrow morning's opening at 9:30 Eastern time, if the dollar is under 99, that will suggest that this is the first time that gold can have a bit of a bounce that might last a little longer, and then I'm going to have to make the decision. Is this a peak F in the daily, or is it B? Are we going higher, or are we stalling right here? And the TLT, as we go to a break, the TLT is holding very nicely up $1.34 at 128.06. I'll talk about some of this a little bit more when the commercials finish. Basil Chapman, Tigers Editions Hour, Dow's up 108.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. Yeah, Ides of March. Wasn't that yesterday? Ides of March. Wow, very interesting. Anyway, today being the 16th of March, we're looking at AVG, which is AVG Technologies, NV, Netherlands company, I guess, holding quite nicely at the 22.51 area after having made a peak D in the daily at 22.90 on the 4th of March. Question about whether it was time to get in or where to get in. I've got peak C in the weekly, and it's very interesting that with the choppiness from last week, this is just stuck in a trading range, and today would have been the test to break out above the high of peak D, and it's kind of stalled. So I'm suggesting that you hold off a little bit. It's overextended in the daily, but it is not taking it's taking a timeout by going sideways rather than pulling back. The best thing would be is that if it goes higher, I don't see it going much higher than the 2290 to 2320 area before pulling back, but that would make leg D. So I would prefer for before leg D starts at 2291. I would say that the area that I would like to look at it as a positive, because the monthly chart is still very strong, is on a test of the low of 2219. That was the low of the 10th of March. I'd prefer actually that it actually dips between that level and the 2205 low of the 26th of February, and then starts a move that says, I'm holding sideways. No, I'm not making head and shoulders, left side, right side shoulder with the head in the middle pattern. Rather, I'm going to have a move that looks very much like this, just a kind of a consolidation, and here's your down channel. And all I'm going to do is use up some time because the weekly is still very strong. And there are two ways to do it. One is to start a position right here at 2250, expecting that even if it rallies, it will come back to the 2250 for a test. And if it doesn't, at least you're in and it can go higher. And if it does drop, you're only in the starter position, and that you really want that test on the downside. So you're prepared at this point to take let's say about a 75 to a 1 point loss on this if you're wrong, but you want to see a testing of this support line of 22.02 with a very tight stop of 22.05. I'd probably say this candle right here that goes down to 21.86, the candle of the 23rd of Feb. So this is the area, and I'll circle it in. I'll circle it in just to show you that it'll take a little time, but you might be buying it in a potential downdraft. In other words, if the Dow by the end of the day which is up at 194 points at 79.43, nice action in the daily chart, up 21.5 in the S&P at 2,074. If there's a pullback by the end of the day and the Dow closes under 100 points higher, let's just say under 85 points higher, and the S&P gives back about 10 points, so it closes at up 11 instead of up 21, I would suggest that we are in a phase here that's really important, and that there was a really, really, really good chance that all the action that we've seen right now is more emotionally based. That's why you're getting this selective move. You've got some of the biotechs, the Amgen in particular, suddenly spiking up. It's up 7 because of a weekend report that came out. I was actually talking to someone over the weekend who really knows about the biotechs. It's not his field, but it's his field of interest. And he was talking about some of the activity that's going on, and that there's a new, it's like, think of it as a Xerox that can be made of generic drugs, and that could, in fact, be a catalyst for greater generics and much, much cheaper. And the generics could be under pressure. That's the generics of some of the firms that have the actual proprietary rights to some of these drugs. So it's a very interesting period, but they came out with something that really has sparked a big move up in the IBB. And the IBB right now, that's the biotech, NASDAQ biotech is up 7 at 352.53. That is impressive. So, when we're looking at this AVG, I wanted to just say that it's a different category altogether, AVG Technologies, and I'm looking at it and thinking, well, if there is a market pullback, it's going to have to be suggested by the end of the day into tomorrow. That's really what my point was. And we would have to see the VIX index, VIX, which is right now at, I missed it, I won't be able to get it. We got a break coming up. Basil Chapman. We're going to go to Scott and Safety Officer straight after. Scott, you want to look at?
Alibaba.
Okay, we'll be back and we'll look at Alibaba.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back on the 16th day of March. The Dow is up 195 at 17,944. S&P's at 2,074. Very interesting. And we're going to go straight away to Scott in Safety Harbor. Scott, how are you?
Pretty good. I want to mention, I deal a lot with Gilead, and, we took a big bump. We spoke about it last week and so forth, and I got in and out, but then I got it in again because I felt like it was going higher when it was at 104, and it dropped back to 99 on the news that India had a company that was, copying basically what you were saying earlier. They made it real easy to copy that hepatitis drug, $1,000 for $10, and then the Gilead stock dropped back. The figure that I was really looking for, Basil, was the how much was being brought in by India anyway from Gilead. I don't think how many people in India were paying $1,000 before. So.
Yeah, I was actually in this. It was St. Patrick's Day party, a neighborhood party, and the person that was there is a guy who's actually one of the top specialists in HIV. So what has happened in some of the drugs, especially manufactured or used in some of the foreign countries, is that the progress towards the diseases has been just phenomenal. At the same time, there's some difficulty in gauging precisely the quality of some drugs, if they are not manufactured in places where there could be a very strict monitoring. So I think the issue right now in the entire field is that the progress that has been made in the biotechs has just been quite phenomenal, and it's going to be for medical reasons, it's going to be quite spectacular because
it's been phenomenal. But what you're saying brings up an interesting point. If you were in India and you had access to $1,000, for your hepatitis that could kill you, would you buy the knockoff for $10 or the $1,000? So really,
that's right.
If you think about it, it won't rock the Gilead market at all, because I doubt if they sold more than 1,000 doses of that drug last year in India anyway.
You're probably correct, yeah.
And here's another thing you brought up about HIV, which is very, very interesting. The pharmaceutical companies obviously are businesses that are motivated by money. Many of these pharmaceutical companies, even though they would like to have the answer to HIV, know that if they do come up with it, they're not going to be able to ask a premium. So, to use street slang, I mean, as the kids would say, they're going to put a guilt trip on whatever company comes up with it. Hey, how can you charge $2,000 for HIV?
Well, there was a company that was mentioned in the conversation that bought the rights to a particular drug that was not selling all that well from one of the large pharmaceuticals. They took it and they charged an astronomical fee for the drug. They were able to, through various just ways of doing all legitimate ways, but they managed to push it to the point where it made them an absolute fortune. So you've got to understand that there are pros and cons in the whole medical field. And
it's motivated by money. The same things happen in the music industry, which you've heard many times. These artists are like, we're not going to even try to crank out a good music or movie filmmakers a good movie, because they'll knock it off. And Basil, I was in New York City one time, and 3 days after a movie was released, they were selling the DVDs on the street.
I've heard that. Not only that, for the musicians, you see, this is actually the paper that I'm producing. I should have it ready either today or by tomorrow for sure. That I'm sending out to subscribers. Discusses the commoditization of almost everything that's out there, and that it's by choice that people are choosing to bump up when they're buying cars, because it has all the new electronic gadgets and things that are, some of them are very, very important for people driving, especially rear view. How much does it cost to put a rear view camera? And what it costs, probably $3 or $5 or something like that, and they're charging an absolute fortune.
Right.
But that's by choice. But the reality is, and I talk about this every year, if you go to the auto show, you can spend the least amount of money these days, and you can get a car that's pretty well equipped and in safety, way superior to almost anything that was in production, say 10 years ago, just in terms of the safety features. So that I call the commoditization, and that's what you're seeing in bond yields. That's what you're seeing. Isn't it incredible that you'd have a rush to compete for lower bond yields? At the same time, this is what we're seeing. And, people don't understand that what it costs a biotech company to go public or to have anything go on the market is an incredible amount of money. And I've spoken about this before. I have a friend, I haven't seen him for quite a while, but he was in the FDA. He was one of the people that set the regulations, or at least use the regulations to be able to pass or to fail on stage 2, 3, or whatever it is in the biotechs. And he said to me once, he said, I cannot believe that some companies are spending literally tens, if not hundreds of millions on products, and all they would need to know is that the way they have specified what their outcome will or won't pass my criteria that I'm set. I'm bound by rules. I might understand what they're doing, but if they don't specify it in exactly the right legal terms, they won't be passed. And there are companies that did not pass that, whatever stage it was that they were going for, because of a detail that they were not even aware of. It was words. It wasn't the
all that
deeds.
being said, Basil, it's more advantageous for a major pharmaceutical who has the capabilities of as they've done, curing hepatitis or even HIV. It's more advantageous with everything that you said for them to stop production on everything and have everybody do something that would find something that would grow hair, because the liability would be nil on that, and they can charge whatever they want, and no one's going to say, hey, how dare you charge that for that, because there's people dying.
Well,
So
you're absolutely. I have a friend whose son is working on something that has to do with the trigger points for the desire of eating, for food. Can you imagine if he's able to detect how to switch that off? That'll be incredible.
I mean, it's getting out of hand. But back to Alibaba. Alibaba is not anybody's darling anymore, but it is what it is. It's the Chinese internet. They don't have
now,
Google.
Did you go? Have you got a long position on this now?
I am forced into a long position. I'm in it at about 102 in a large way, and I'm just going to hold it because I think, just like Baidu, I think it will have its day. All this bad stuff comes out of China, but like I've said many times, if he's friends with the Chinese government, that's great. Okay, that's not a bad thing.
So let me just look at this. So you're in a little bit of a higher price than where it's trading right now.
Right.
Baidu is kind of stuck. So let me just have a look at this, because when I looked at Alibaba early this morning, before today's candle, it had the pattern that I look at, which is the lowercase h, but with a rising MACD and a very positive stochastic.
Exactly.
And I looked at it and I thought, wow, this is going to be a very important day. Coincidentally, you just called. This is the first time that I'm looking at Alibaba. Can you see what I'm looking at? And
Yes.
It's the first time that it has the potential to push above the high that was made just recently of 86.27. If it does that, what you need to see is that the stochastic doesn't stay down in the 30% area, that it actually pushes towards 47. You want to see the stochastic in the 55 to 60 area by midweek, if not at the end of the week at the latest. That's number one. Number two is the gain that it's got today. Alibaba BABA is up 2.78 at 84.62, up 3.36%. What's really important about this is that the weekly chart is only giving candle signs, but it's not really at this point giving a sign in the MACD that it can have a very strong rally. The stochastic is slowly at 8.9%, slowly moving higher. But the other aspect that is actually favorable on a very short-term basis is that the 120-minute chart went to peak A, peak B. Well, I called it B minus because it gave back the big gains in the 86s down to the 81s. And now you've got another pattern that says peak A, peak B, failed again, and you've got another rally without taking out the low. So this gets the chance of being a leg C. And
well,
if it's a leg
Basil,
C,
I believe in sort of a spirit aspect to stocks trading, and I deal with 5 or 6 people, and in the last 3 or 4 days, every single one of those friends and family has contacted me and said, you know what, I'm just about done with Alibaba. Now, in the past, when that has happened, right after people get sick of it, it goes higher.
Well, yeah, that on a sentiment basis, I can understand that exactly. But you don't want to just base it on sentiment. What you want is also the technical veracity.
That combined with the technicals and combined with the fact that all the bad news lately about Chinese economy is going down. Folks, look around your house. Look in your car. The Chinese economy is not going anywhere. Okay, but
Yeah, I would agree with that. Not at this particular point. The FXI, in fact, has kind of stalled in a trading range. Let's just get back to Baba. What I would like to say to you is this. You follow it very closely. So what you really want to see is that today's Monday. I would say tomorrow afternoon to Wednesday at about noon, you want to see this challenging the high of 86.27, the high of the 5th. If I can start to push above that and make the 84 to 83 area, preferably not 83, just 84 area, a support level, then all of a sudden you've got a pattern that says, great, now I'm forming some kind of a cup formation. If I can close above 86.60, somewhere around there, then the next level to look at is 87.16. And then 89.30. Those are the levels to look at because you are looking forward to it trying to get to the 9-period moving average at 94 so that it can finally fill the gap. That's a long way to go. So all I can say to you is I'd be watching the parameters. You want to see the 86s pretty soon, and you do not want to see 82, definitely not 82 to 81 because that's just going to say, uh-oh, maybe it's not going to go down much, but you want it to go up, and that's really the issue.
I think one thing that's holding everything back is we can't seem to turn the channel on Apple. I think someone on CNBC the other day said, why don't we just have the Apple show? We'll just trade Apple, get rid of everything else.
Yeah,
I
think Apple's made a top here that's going to be a top that we've got to be careful of. 133.60 with a round number.
I'm completely out of it, and I agree with you.
133. I think you want to see a rotation out of the Apples into the Alibabas. That's really what you want to see.
Exactly. That's going to become on the sideline, and then we're going to get back into the biotechs. We're going to get back into Alibaba. You know, don't you agree with me that if you are holding Alibaba, now is definitely not the time to get rid of it?
Yeah, and actually, I would not say get rid of it. I would just say now's the time to have a stop below the most important lowest low that was made in the last few days.
The granite for me bottom on Alibaba is 80.81. I've always thought that, and it's held true. So.
Okay, but in the meantime, it's looking good for today.
You're the sharpest tack in radio.
In a blunt pull.
No, sir.
Thank you, Scott. Have a great day. Thanks for calling. So, folks, let's just do this again. I wanted to just show you Apple on the daily went to a trough G, and then it ran up to an A and a B. That 200-period exponential moving average at 122 is really, really important. Why? Because if you are looking at FG, if you're looking at this pattern that says lower lows and lower highs, at least in a short-term context, that's all it's been doing since it made that high back on the 23rd, was it 22nd or 23rd of Feb? Let me just check. That was the 24th. And since then, it hasn't been able to get out of its own way. And even on a day like this, it should, in fact, be leading. Now, here's the other clue, that because of its weighting, this is both WAIT and WEIGHT in the QQQ series, it's really been impacting. I've been watching this very closely, and the Q's really moved up because Apple was doing so well. The Q's made it the high on the 100 at 109.42 on the 2nd of March. So a little bit later, it also, of course, has some other it has some high techs in it, as well as it has some biotechs in it. Now, this is going to be very important as far as I'm concerned. If, in fact, I want you to go to, I want to go back to the VIX index because to me, that's one of the big criteria. Look what's happened here. You've got a rally in the Dow and a rally in the S&P. The QQQs are failing, but as far as new highs, new all-time highs are concerned, well, we've got a break coming up. I'll talk about that the moment we get back. I better write it down so that I can talk about it. This is about new highs. I'll be right back. Basil Chapman, Tiger Technicians Hour.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
So, yeah, I was going to do a couple of things as I was talking about new highs. So I wanted to quickly look at Netflix, as Jay asked me in the chat. Yeah, Netflix looks like it's trying to fill the gap. The 200-period exponential moving average is at 404. It's trading at 419 right now. It's down $19. There's something going on with Netflix that just hasn't been right for the last 2 weeks. I've been talking about that, and it was one of the leaders, and it's not now. And that's part of the QQQ's problem. There are a couple of real biggies that are just not doing what they should. So yes, I think it's going lower and a gap down today. I'm not sure why. That's the story there. Let's go to Ben in Tallahassee. Ben, how are you?
Very good, Basil. How are you doing?
Well, thank you.
Great. Hey, based on this morning Traders Corner, it looks like we're right here. We're entering the buy zone for the TVIX and the S down. I was just curious, based on this movement, do you still feel strong about that?
So let's look. So the TVX is the VIX is an instrument to trade the VIX itself. And let me just look at the VIX for a moment. You see, look what's happened. I was going to bring this up earlier about going to new highs, etc. I wanted to say that the VIX index is at 15.52, down 48 cents with a powerful move like this. And the last low was at 12.87. And that's the last, no, not the low. It can go down low. It was at 11.53 back in December. And I'm a little surprised that it's only down 3% because I would have expected that it would be down at the 15.30 to 14.90 area. So I'm watching this and I'm thinking to myself that there's a rotation that is definitely going on at this particular time. It's impacting something like the XLF. And as you know, we have a position in the XLF, which is the Select S&P Select Financial Spider Fund, acting very well. And that is really the issue here, which is going to be part of what I'm talking about in my paper that I'm producing. And the aspect that I think is very important is that if the Fed is coming out, so let's do this because we've got about a minute to go before we get Larry coming up, Larry Pesavento. Really looking forward to Larry's show. Let me just say that two things are going on. One is this is talk about the Fed and interest rates. Now, the Fed, I don't think the Fed is just going to move in a moment's notice like this. That's number one. The other thing is that if you're looking at interest rates around the world, why would the Fed want to see our interest rates really skyrocket? They'll understand if there's a little bit of a move to the upside, going back to where we were last week or maybe even a little higher. But then I don't think they wanted to go much higher than that. And all the reports, the economic reports that have been coming out over the last week and a half to 2 weeks have not been all that positive. So my suspicion is we're looking at the TLT. It had a gap, an island reversal to the upside. The TBT had an island reversal to the downside. That's saying to me, just for the moment, maybe we can set interest rates aside. And now let's go back to what would be very important, because I'm trying to get every sector that's important and say, are they at a level where they're going to correct over the next 3 months? Or are they at a level that's going to be very more positive than negative, but maybe even leadership quality over the next month? And that's really what I'm looking. So to go to the VIX index and the TVIX in particular, this area that we're in right now says that on the day, if the Dow starts to climb into the 250s, there's a chance, and I hope it doesn't happen for other reasons, but there's a chance that this is an accelerated breakout move that we're going to get into the Dow now rather than after a correction, because what it's going to do, it's going to make a correction when it comes way more severe, and that puts it into a different category. So my answer to you is we've got a very tight stop. You know exactly the rules. But if you want, you can just step aside. I don't know, you think you're going to miss all that much, but that's kind of what I've got going. We'll see how that works out. So hope that helps you.
Yeah, I guess same with the S-Dow, too.
Yes, same. Oh, there's no trade on that. I sent an update on that.
Yeah. Oh, okay. I didn't see it. Okay, thanks.
Stay tuned for Larry Pesavento, folks. Basil Chapman, Tiger Conditions. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.